Hello and welcome to the Business Standard Morning Show. I'm Vinu Santhu. Let's take a look at the stories for the day.
रामू दो चाय दे यार।
अरे नहीं यार, एक चाय कॉफी।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI का home loan, I agree with you.
SBI is the banker to every Indian.
India has finally inked a free trade agreement with the country after a yawning gap of over a decade. The fine print of the pact, signed with the United Arab Emirates last month and released this Sunday, threw another surprise. Delhi has extended national treatment status to UAE firms in bidding for central government tenders. But what does the opening of central government procurement market for UAE firms mean for Indian companies? And why has it raised concerns in several quarters? Watch our next report to know more.
The Comprehensive Economic Partnership Agreement, or CEPA, between India and the UAE, which aims at increasing the bilateral non-oil trade to $100 billion in 5 years from $45 billion now, has many firsts. These include chapters on digital trade and intellectual property rights. But India seems to be effecting a significant change in its trade policy stance by opening its central government procurement market to the UAE after keeping the subject out of free trade agreements so far. This will give national treatment status to UAE companies while bidding for central tenders, which means such companies will be treated on par with Indian companies for procurement. Public procurement as a percentage of GDP is estimated to be about 20%. For a $3 trillion economy, this amounts to public procurement to the tune of $600 billion annually. Central public sector enterprises are a major contributor to the public procurement of works, goods and services.
The stance of India, if you look at, is moving towards a gradual shift on the issues which were contentious in nature, such as if you see government procurement, e-commerce, sustainability, environment at the WTO. But now India wants to engage on these issues bilaterally with countries, and they need to be prepared for multilateral level on these issues as well. On the other hand, if you look at the Indian industries, also need to be prepared for these contentious issues which are at WTO level. We wanted Indian industries to face them bilaterally first, and then understand the nuances of the same, and then move forward towards the WTO at a multilateral level. Vietnam is also not been part of plurilateral agreement in the GPA. But Vietnam did sign an agreement with the European Union on the government procurement, which means that the industry, which means the countries want to understand, that what is happening between the bilaterally on these issues, and then probably being able to face 180 members at the WTO.
In June 2020, the government barred global tenders from government procurement up to 200 crore rupees. Even for tenders above this threshold, the government can choose not to invite foreign suppliers. The government won't enjoy this discretion with UAE anymore. The clause, however, comes with its own limitations to safeguard the domestic industry. Public procurements of goods and services, including construction services above Rs 200 crore by 34 designated central government ministries, will be opened up. However, procurements by all central public sector enterprises, autonomous bodies, and regulators are not covered under the deal. Procurements related to construction projects or any infrastructure projects, procurements relating to the healthcare sector, procurements of agricultural products for food aid programs are also not covered under the deal. Recognizing the important contribution that MSMEs can make to the economic growth and employment, the agreement allows both parties to apply a preferential procurement policy for their MSMEs. What are the larger implications of India's move?
We have to also open up government procurement to Japan because of the clause that there was in the India-Japan CEPA. The larger implications is that whatever the government procures, that market will now have to be open up to foreign competition. Exposing the smaller companies to global competition is going to be disastrous. The WTO, the advantage was that, or rather is that the government procurement agreement is an optional agreement. But we have been under pressure to open up in several of the FTAs, especially the trade and investment agreement with European Union. Once you have given this market to one partner, it will be very difficult for the government to say, no, I'm actually giving extra preference to one partner as compared to the other. And then, of course, the WTO. As long as we had taken this state, there's very explicit position that, no, this is government procurement doesn't help our companies. That is all. It was fine. We could take a consistent position there. Of course, no one can force us in the WTO.
And what are the implications for Atmanirbhar Bharat?
While the government has not unequivocally said that it's going to procure only from domestic players, it was always reiterated that the government would be giving a preference for the SMEs in particular, so that they had access to this particular market. And I think we also had the GEM, which was set up essentially to say that the government would be open to picking up things from the SME sector. Now, today, when we are having this free trade agreement with UAE, and one of the terms out here says clearly that companies from United Arab Emirates will also be allowed to place their bids when it comes to government, central government procurement. It's definitely a different tune which is being sung, because not just because it's United Arab Emirates, which may not be a very big player as far as India is concerned, when it comes to having those kind of companies which could provide those kind of goods to the central government. But once a precedent like this is set, it is but natural that other FTAs which are already there, or those which are going to be signed, will definitely include this particular norm.
Known for its cautious approach towards FTAs, India is currently in negotiations with the UK, Canada, Australia, and the Gulf Cooperation Council. The government procurement clause in the deal with UAE could very well set a precedent and open the floodgates for similar demands from other nations in ongoing talks. India's existing free trade partners could also demand a review of the agreements. The move also sends confusing signals to local suppliers, just as India is in the midst of the Atmanirbharta initiative to strengthen domestic manufacturing.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Domestic industry is indeed staring at competition from UAE firms operating in free trade zone. Let us now move on to the domestic real estate industry. In an interview with Business Standard's Nivedita Mukherjee, Anshuman Magazine of CB Richard Ellis South Asia Private Limited explains why he sees robust growth for the sector which was hit hard by the pandemic. Let's listen in.
Hello, Mr. Magazine. Welcome to the morning show in Business Standard.
Thank you for having me.
I'll begin by asking you the COVID story. What happened to the Indian real estate sector really during that time?
I think the first impact, of course, was on construction. A lot of the projects that are ongoing there was a standstill immediately. So that was a bit of a shock for everybody, because this could be office, residential, retail. I mean, there's so much construction happening, just came to a standstill. And of course, whatever happened with labor, etc., everybody knows about it. So I think that supply getting constrained, the work stopping was the first shock. And then the other part, of course, I mean, there are many other small things that happened, but one key impact was that decision-making became slow as far as the investors and occupiers are concerned, because there was so much uncertainty and nobody wanted to take decisions. A lot of times there were transactions which are happening, they came to a standstill. So there was, of course, a significant impact on the real estate industry like any other industry.
But, what I have read and what I've heard from people is there was a minor blip on the real estate sector and it was not really a major blow. Is that a correct assessment?
I would agree with that. And the reason for that is if you look at it from the other side, it could have been much worse, especially what we went through during the pandemic. Those few months in the summer were just horrific. The impact overall could have been worse. So that way we are fortunate. And the second part is the recovery was quite substantial in a short period of time. I think that's what helped us.
In your recent Outlook report, you have kind of charted a growth path for Indian real estate in 2022. So are you betting on commercial more or on the residential space this year?
We do expect the residential to continue to, I can use the word thrive, because there is, like I mentioned, the demand is there. Not only people are upgrading their homes where everybody wants a better quality of life. Like I mentioned, health and wellness, open areas, etc., larger spaces. But also office space will do better than, is expected to do better than last year. There is a huge expansion on the logistics side of real estate. And even this year, there will be a significant increase in logistics space take up compared to last year. And then we are seeing relatively new areas like data centers, co-living, student housing, all of that, again, coming back to life. To say after post-COVID.
There was an interesting survey recently where about 50% of the sample said that they would prefer real estate to any other asset classes like gold or stocks. So do you think that confidence is real?
That confidence is real, especially in Asia. Our Indian mindset and the Asian mindset is that physical asset. I think most investors do not get maximum comfort from owning a physical asset, right? That's one. Second is, how many opportunities are there to invest? Where does one invest? You can put that much money in the stock market. Stock market is great, but it is volatile, although it's more liquid. But you can only put that much. So everybody does diversify. And traditionally, real estate has always been, a preferred investment. And historically, if you look at people who had invested in real estate, the returns in India have been, I would say, unparalleled globally. That is going to change as our economy matures, as a real estate market matures. We don't expect the returns what has been seen historically. However, still, because we are an undersupplied market overall, India still has many years to grow. The real estate investment will continue to give returns and will remain a favorite investment destination. Going forward, like I mentioned, as we develop further, as we mature, anybody investing in real estate should take an informed decision. They should really, decide on why they're investing, not just because it's real estate, you should buy it.
It's interesting that you're talking about informed decisions. Recently, there was a case of Supertech, which has gone into insolvency. There are other bad stories in real estate. So where is the check, and is there any cleanup that is happening in the sector?
Certainly, I think one area which doesn't get enough recognition, although does, is RERA. So there is some regulation, although personally I'm against too much regulation because it just slows down things. But there is a RERA, at least projects are getting registered. And that is one comfort the consumer should have. But besides RERA, please do your due diligence. Look at your legal papers properly, because part of the reason, of course, a lot of the projects got delayed or didn't come in is many people's fault, but it's also the consumer himself or herself. That's why I said should be cautious and make sure that you take that extra advice, legal advice or otherwise. Do your due diligence properly before you invest, because real estate is an expensive investment.
Finally, a question on prices. There has been a buzz that because, construction material prices are going up, do you see real estate prices going up in the near term?
Prices are expected to go up to some extent. Very difficult to say how much, etc. One of the reasons, of course, is besides demand, is also inflation. The cost of input, input costs have gone up. But overall, I feel that what we have, like I mentioned earlier, what we saw historically, those abnormal price rises, that is not expected to happen. But certainly, there will be price appreciation at realistic levels.
Thank you so much, Mr. Magazine, for joining us in the show.
क्या हाल?
मत पूछ यार,
फिर से स्टॉक्स में फंस गया। तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Analysts are turning cautious on stocks of real estate companies because of soaring input costs. Meanwhile, ITC stock, which remained comatose for months at a time when the markets were reaching for the stratosphere, has finally started to move. If analysts are to be believed, there is more headroom in this counter. Here's a quick check on how fundamental and technical analysts see ITC performing over the next few months.
The stock of cigarette to hotels conglomerate ITC has gained around 19% thus far in March, far outperforming its peers like Hindustan Unilever, which has lost 10% during this period. Peers such as Godrej Consumer Products, Britannia, Nestle India, Dabur India and Marico too have lost 7% to 11% in March. While the Nifty FMCG index has mostly been flat, the Nifty 50 lost over 2% month till date. The fall in most FMCG stocks, analysts said, is on account of rising raw material prices that gained ground on the back of Russia-Ukraine war. Over the last quarter, prices of commodities like palm oil, crude oil and skimmed milk powder are up 23 to 42%. Crude-linked derivatives, currently witnessing single digits inflation, are likely to catch up with a lag of 2 to 3 months. So what's happening with ITC then? Analysts say the company is relatively insulated as it has other verticals such as hotels and cigarettes which cushion the blow to its FMCG segment from the sharp rise in input costs. What's also working for ITC is the fact that the government has kept the excise duty on tobacco unchanged in the union budget for fiscal 2022-23 and the cigarette volumes are steadily climbing. That apart, lifting of most COVID restrictions post the third wave has led to an increase in mobility, which augurs well for the ITC's hotel business. ITC's paper business segment, too, is likely to do well in the backdrop of tight paper supplies in the domestic market and a possible surge in paper exports. Analysts such as Vinay Khattar, head of research at Edelweiss Wealth Research, believe all ingredients are in place for the stock to now catch up with the markets. The positives, he said, will lead to an earnings CAGR of 12% in FY 22-24 against a mere 7% in the last 5 years. Cigarette volume should revive at a CAGR of 5% during FY 22 and FY 24 as against a CAGR of -1% between FY 11 and FY 21. FMCG's EBITDA margins likely to scale up to higher single digits while the hotel, paperboard and agri-commodities businesses are set to revive, said Vinay Khattar, head of research at Edelweiss Wealth Research in a recent report. Technical analysts too see the stock higher in next 3 months provided the overall market sentiment does not take a knock due to ongoing political situation. Let's go to business standards of Avadhut Bakkar to understand how the stock looks on the technical parameters.
Shares of ITC are few bucks away from hitting new 52 weeks high. The present high stands at 259.20 level. Whenever ITC manages to cross this mark and enter a new territory, one could definitely see an upside towards the next hurdle of 280 levels, a possible jump of 7 to 8%. On a wider perspective, ITC stock has a formation of a golden cross, a crossover of 50 days moving average and 200 DMA. which investors and trading experts consider as a bullish signals. So based on the formation, one could definitely see on a breakout above 257, which is the breakout mark for the golden cross, one could definitely see a spike towards a new historic high. The present high stands at 315 levels. So overall picture for the ITC at this current levels looks very promising, and a breakout could definitely trigger the next upside.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After the Lal Street, how about a bird's eye view of the drone industry? During the Beating the Retreat ceremony this year, over 1,000 drones with various formations lit up not just the Delhi sky, but also the mood of the audience. The government said this was just the beginning of things to come. It wants to make India a global drone hub by 2030. And promoting drone as a service model is one way of achieving this target. Let's find out more about it.
As part of the union budget, Finance Minister Nirmala Sitharaman had said that the government would encourage startups to facilitate drone as a service. Drone as a service enables enterprises to avail of various services from drone companies. This removes the need for them to invest their own money in drone hardware and software, pilots, and pilot training programs. For example, a mining company wants to conduct a mapping and surveying operation. Using drones in this case would be very convenient and helpful. But for this, the company will have to buy the associated hardware and hire or even train the pilots needed. And this would involve considerable costs. Here, drone as a service facility comes into play. The miner can go to a drone company which already has the hardware, software, and human resources at hand. This drone company will then use its resources to conduct the mapping and surveying operation in the form of services rendered for the miner. According to the government, the drone services industry is slated to grow to over 30,000 crore rupees in the coming 3 years and create over 500,000 jobs. On a related note, drone-related courses for skilling will start at select industrial training institutes across all states. The government has said that it would also promote the use of Kisan drones for the purposes of crop assessment, spraying of insecticides, and digitization of land records. So, what are the applications of drone as a service? Let us look at how it can be used in agriculture. Drones can be hired for crop health monitoring, damage assessment, yield estimation, land preparation, irrigation planning, and crop counting. Mining enterprises can use drone services for mine site planning, site monitoring and maintenance, mapping and surveying, inventory tracking, and live maps for accurate data capture. Apart from agriculture and mining, sectors such as construction, energy and utilities, telecommunications, and oil and gas, among others, will find many applications for drone as a service.
यार आइसक्रीम खाएं? नहीं यार, कुल्फी।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
अरे SBI contactless debit card? I agree.
SBI is the banker to every Indian.
Using the drone as a service model, people are now getting never seen before candid wedding shots. And farmers are getting to uniformly spray their fields with anti-pest medicines without shelling out money to buy expensive drones. That's all for today. For more news and analysis, please log into our website www.business-standard.com. And we too will be back tomorrow morning with more. Stay tuned and thank you for watching.
If you liked this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.